or this dealer to build a school and which some trust will operate, there it will not be. There the person is not getting any benefit, he is getting consideration for doing that service. So, if somebody is getting nothing, getting something for doing almost nothing, or would have done anything otherwise also in his own interest, then we should look beyond this transaction and find out what is the nature of the transaction. Now, in the taxation, there is a concept called step transaction. If there are certain steps, independent individual activities, seemingly independent activities are taking place one after another, and in a preordained manner, necessarily in that sense it has to take place, then the courts have held that the tax authorities can ignore the intermediary transaction, take the first and last, and take the net effects. Now, the step transaction will happen and is to be accepted when there is a binding commitment, and then all the steps, one after another, they have mutual interdependence. When any of these steps will become futile unless all the steps are undertaken, then the objective is to get the end result. Now, these are the tests where step transactions has to be taken into account only the first and last, and see the net effect which is and accordingly view the characterize the transaction. Now let us go back to this. Now here what happens? The travel agent books page 100. It goes to airline. Airline pays a booking fee of 10 rupees to Amelio GDS. Now Amelio GDS out of 10 gives 5 to Amelio India, because Amelio is doing the legwork part in India in locating the travel agents, servicing them. And then Amelio India out of this 5 rupees gives 2 rupees to the travel agent. Now this is how the step transaction circle is complete. So from the point of view of travel agent, what it constitutes, it is nothing but a discount or the reduction in the cost of the travel agent, the cost of booking a ticket. It may not be direct price reduction from airlines, but the way he operates, he gets a facility which reduces the cost, and also he gets 2 rupees, which also reduces the cost. So this is nothing but a reduction in the cost for the travel agent, and effectively he is paying 98 rupees. It should be viewed in that way, because otherwise this individual transaction, if you take, that will lose its meaning, because we will not able to find out what is the consideration, what is the service, and these are all linked. So this way it has to be viewed. This is my view, but most of the operators in India, they are quite they are demanding, and this GDS companies are paying. And while discussing this thing, some of these GDS companies are deducting TDS from these 2 rupees. Travel agent actually is happy, he is getting extra incentive even if you deduct TDS, he doesn't find TDS is not a permanent loss. But now they are saying that you are deducting TDS, that means you are considering it as a service, so you must pay a service tax. But I think this is the most appropriate way of looking at things. Now this captive jetty. Captive jetty, the question was simple. All of, yes please.
Scenario after July 2012 also remains the same?
Same. I am not, it is not dependent on any service tax provision. It is not dependent, I am only analyzing a commercial transaction. So there is only purchase and sell transaction involved, nothing else. There is no other. Because the Amelio India is nobody. He says that I will get your ticket booked through Amelio GDS. And Amelio GDS is getting a booking fee. It is only when he books that this thing triggers. Now one cannot say that I am giving a service of booking, so I am getting a fee of 2 rupees, but he has to spend 100 rupees. For getting an incentive of 2 rupees, one would not spend 100 rupees. So that is why you have to look beyond. You have to find out what is happening underneath. So we have to go and see the transactions and link them. Then only we will come to know, because there are several seemingly independent transactions which are necessary to be treated as one composite activity. And accordingly, each party has to be treated for tax purpose. So here, as far as the travel agent is concerned, travel agent is only buying a ticket, nothing else.
What about initial bonus amount which the travel agent is getting?
This is reduction in cost. This is purchase and sale transaction part of that only. Somebody purchased a car, students traveling in London Tube, they get concession, they purchased an identity card by paying an upfront fee and subsequently concessional rate. The card which they purchased, the initial paid, they don't have this is advance payment for the journey.
What about the restriction?
80-20
restriction?
Which one?
80-20 business restriction?
No, 80-20, that restriction they have been put in for practical purpose. Suppose the GDS line is down. In that case, the travel agent should have some ability to service his client, that is why up to 20% has been allowed. So, by ensuring 80%, it is this Amelio India ensures that he is the captive consumer of this service or the buyer platform, user of the platform, only for that purpose. Yes, please.
So that 100 rupees which is paid by the travel agent, by name only it is, he is a travel agent. He collects that 100 rupees from his customer and then he pays to the GDS.
No, I will explain. Travel agents are not agents. They are doing their own business. They are principals. They are resellers. They often sell tickets on credit. And customer doesn't pay, the airlines will not anyway. They are not agent of either customer or the agent. If they would have been agent, they would have established a commercial legal relationship between the customer and the agent. If he cancels the ticket, he will not go to the airline to get the refund. The agent has to pay the refund. Agent sometimes shares his commission with the customer. So between customer and agent, there is a principal to principal relationship. He is an agency or a commercial establishment. He is actually not an agent.
And if in this situation, if he really acted as an agent, he merely collecting the amount from his buyers of the tickets, and if he is paying, then would have been
anybody who is an agent, you remove the agent and the same situation will prevail. Instead of the travel agent being principal, the customer becomes the principal, but the relationship will same. The circle will remain same. That step transaction will remain same.
But that will be the 2 rupees which is received by him, it will be his income. Whereas that 100 rupees which is collected and paid, it will not be his cost.
Collected
and paid, it will not be his cost. I am simply collecting 100 rupees, I am paying it. Against that whole circle, I am receiving 2 rupees. That 2 rupees I am not passing out to my customer, it is my income.
So you are a principal, you are a reseller. You are buying the ticket at 98 and selling it at 100. So
Actually, it doesn't happen. I have to buy, say I am agent, I collect 100 rupees from the customer, I pay 100 rupees to the airline, and later on at the end of the month, airline reimburse me 2 rupees.
No, that timing difference is not material. As long as this is preordained, it has to happen and you acquire the right at that moment, at the time of booking, then everything has to be netted. So he may receive 100, all the turnover discounts are given months later, after 1 year when the turnover is achieved. At that time, an amount is passed on to the dealer by the manufacturer. So, what we have to see at the time of booking whether you have acquired that right or not. The next, this captive jetty.
Sir, excuse me. I would request the participant let him share his views and all, and let him complete his whole session with his views and all. Then only we can, if you have any time left, we can go with the question and answer if you have. Otherwise, we will not able to complete the session. Let him complete his views and all.
So, particular case should be solved at that time only.
No, we can share, but let us be quick.
That is very quick.
We will answer all the questions. Now, this captive jetty, the question is quite easy. Everybody replied that there is an exemption, so there is no need of going into anything as far as the answer is concerned. But some people raised the issue of valuation and VAT. Now, as far as VAT is concerned, there is a construction service. There is a works contract by the this ABC. But what is the remuneration? Remuneration is not in money. Remuneration is in the shape of service, port service. So it's a situation of barter. So therefore no VAT. But as far as valuation is concerned, maybe for the purpose of safeguard credit, what will be valuation is extremely difficult. Now, one view was that it's a self-service. ABC is constructing jetty to use for its own use and for a long period of 30 years. And not only that, ABC has to keep the jetty maintained. And when the jetty is not being used, then only this port trust can give to somebody else. So therefore, as far as the 30-year period, during that period, they have constructed something which they themselves are using. So it is sort of self-service as far as that is concerned. Now this valuation rule says that if everything, if the payment is in kind, then you take the equivalent money consideration. Now what is equivalent money consideration? Equivalent consideration, here the port trust is giving service. So this is extremely complex, and if you take into account the captive use, this jetty has been constructed and being, of course there is service because the jetty belongs to the port, but that is not over. For jetty, this ABC is not getting something different, say gold. ABC is getting in return the jetty itself. They right to use the jetty itself. So when jetty is being used, it is a captive use. Like in Central Excise, you manufacture an intermediate product and use it for manufacturing some other product which is cleared for sale. Then the law permits that in between you ignore, you pay the tax of the and because this crediting is there. Now some such sort of thing can also be argued here that this intermediary is being used for further. So we can ignore this and concentrate on the final taxable event, and this is nothing but a cost. So I am not reaching any final conclusion here. I am leaving the thought for further exploration by you. Now next,
Sir, this 75% amount which is being charged by the port trust is for
providing these port services cannot be said to be in form of any discount or any consideration for the ability to be used by the trust.
From port's point of view, also there will be a challenge. Port is getting 75% in money. But what about the balance? Port is giving port service. How it is to be valued? Whether port has to pay only on 75% or something more? Because port is giving a free jetty. So part of the jetty which port has got is towards the consideration of port service. So therefore, if something has to be added to 75% to arrive at the value of port service. How much is to be added? Again, that is a thought I leave it to you. No, I do not have all the answers. I think I will have to think before, because I never thought this, but these were being raised in the discussion. But I have ended with the question. The question says whether it is taxable or not. Now let's go to the next. Captive power plant. Now here, all the groups have said that there are three independent traditions. Leasing of the plant, subject to renting of immovable property, tax as renting. Then sale of washer rejects, VAT, and sale of electricity duty has to be paid. Now there is a minority view that no, you don't go into all these details. There is one, we combine all of them and it is the net effect. And the net effect is some service and accordingly you tax it. Now here what happens? What is the objective of Jharkhand Coal Company? To get uninterrupted power supply. And it doesn't want to operate the plant, it wants somebody else to operate the plant and supply electricity. This power company wants to earn money by operating and maintaining the power plant and generating power and supplying the power to Jharkhand Coal Company up to an amount beyond which if he generates, he is free to sell in the market. So here, each segment is dependent on the other. The breach of any one segment could lead to breach of the other, whole contract. So therefore, we have to see the entire contract as a whole. Now here the composite transaction, if there are several independent contracts, but somehow they are linked together, that means either there is an umbrella contract or there are other provisions where breach of any particular contract leads to breach of the others, then all the contracts should be taken as a single transaction. Now in case of super polyfabrics, Supreme Court said that you have to read the contract as a whole. Don't go by any particular sentence or expression there. Sundaram Finance also, you have to see the economic reality of whatever, even if it is something called a sale letter, it is not a sale letter, it will be some security for the lender. In Vijay Bank case, this companies are purchasing, financial institutions are purchasing government securities. Government securities offer a rate of interest, and if you buy, say, after 4 months, 12% rate of interest, so they used to pay a certain amount towards capital and 4 rupees, if 100 rupees is face value, 4 rupees as the interest. And taking interest as income and the rest is as the purchase price. There the Supreme Court said this dichotomy is not proper. What you are buying is an asset. Whatever you are paying, whatever name you may give, whatever goes from your pocket, the entire amount is towards purchase. So that broken period interest is also part of the pocket, the purchase. In Bokaro Steel, the company which was executing a project to a contractor had given some quarters on rent to the employees of the contractor and getting some rent and giving some advance, getting some interest, giving some equipment like bulldozer, excavators and getting some charges rental for those. Now, whether those are income in the hands of the company from those sources or not, that was the question. Here the Supreme Court said that you see the objective. Objective is to facilitate construction of the project so that the contractor has been giving these facilities, either loan or the equipment or the quarters. Otherwise, he would have charged more. So this is nothing but part of the project cost. It goes on to reduce the project cost. So everything is netted and taken as one single transaction. In India, there are separate contracts for supply and separately commissioning and installation. But there is a clause that breach of one will lead to the other. That means the customer is interested in taking over the complete installed and commissioned plant. So there the Supreme Court said no, this is one transaction. It may be described in two documents because of the cross-fall breach condition. It is one. In BSc similarly, there are 4 contracts: onshore, offshore, supply, service, and then there is umbrella contract. And this bank guarantee was invoked only in respect of all. And then the contractor said, no, there are 4 contracts, you can invoke only that contract where there is a breach. Supreme Court said there is only one contract, all bank guarantees can be invoked. So, even if there are separate citations, separate documents, separate contracts, or within this single contract, there are several activities, separate prices mentioned. These are not independent transactions. Unless if one is completed, the contractor is entitled to receive the amount even if he does not fulfill other obligations. But mostly it is, usually it is not so. These are only on account payments. Contract price is one, contractor is one, and the customer is one. The objective is also one. Now, what service means? Now there is a definition. Any activity carried out by a person for another for a consideration. So therefore, one has to find out what activity is being done for another for a consideration. But if somebody is undertaking activity, maybe some other person is getting benefit, and the person who is undertaking activity is also benefiting. He is also doing for himself. Then this will not fall within this. So we have to see what in the collaboration agreement, what the contractor is doing or what the owner is doing, whether that is something which is done for another for a consideration. Now, here, what are the transactions which needs consideration from tax treatment? For tax treatment, the builder would pay 5 crore cash and 20 crore towards rent. Now, here the builder is to construct the building, and what the builder will get? Builder will get a proportionate right in the property, in the land, and the right to construct and sell his part of the flats. Now, as far as the sale of that right is concerned, that is not sale of goods, so that is not payable. The builder would undertake the construction against this right which it is getting, but the right which his builder is getting, that value of the undivided portion of the land, that is not the entire consideration for the builder, because builder is paying something. So out of the value of that land, this 5 crore 20 lakhs should be reduced, and the rest can be considered as the remuneration for the builder for constructing the building, and in respect of those flats which will go to the owner. Now, as far as service tax is concerned, what valuation? And this remuneration is in kind. It is in that proportionate land value. So therefore, the money value is to be taken as the value for the purpose of paying service tax. Now, sale of flat under construction. There is massive controversy going on because of that K-Raja and L&T and the changes in the service tax law. So service tax is being demanded if the sale is not taking place after construction. Now, we go to that. There is one minority point of view. In this case, this valuation of the builder's consideration for service tax. Most of the people say that you take the value of the land or the divided portion and reduce what is paying, contractor is paying, balance is the consideration he is getting. But there is one view is that you take the value of the flat which the contractor is retaining, value of the flat, whether that you sell, if the contractor is retaining, from that 5.2 crore you can reduce. This is a completely different angle, one person view. But is that correct? What the builder is when the builder will sell his flat, he will sell a value-added thing, the undivided portion of land and also the construction, which the builder has constructed. So the flat value will be much more than the land value. So therefore, the construction which the value addition the builder has done, that is for himself. He has constructed for himself, that there is no service. It is the value which he has got only in the shape of land which can be treated as consideration for the builder and not what he has constructed in his portion of the building. Now this sale of flat under construction. Now here, if the contractor is, if the developer has engaged a contractor and developer is selling the flats under construction, there is a ruling of this L&T state of FE where the Supreme Court, there is not much sound logic in this, but there is a judgment that if the subcontractor has already incorporated the goods in the works, then the contractor cannot make a deemed sale of those same goods. So there will be no further deemed sales as far as the contractor is concerned. But in case a developer engages a contractor who is paying service tax and the goods incorporated in the building, how there can be works content as far as developer and the ultimate buyer is concerned, even if the flat is sold before completion of the construction on installments. Now here, it says that the transaction in transfer of title to goods in goods or immovable property is not service. But at the same time, this sale of flat under construction is deemed to be a service. Now there is contradiction. Now this has to be harmonized. Something is excluded, other thing is included. Now see, there is a difference in language.